I don't think people are bullish enough. You want to own momentum that's working. That means your account go up, right? It took me a long time to figure that out. I want to buy the thing that's correcting, that is signaling higher highs, preferably higher all-time highs. Could the world be better without the Federal Reserve in its current structure? Could be better without NATO. I don't know about NATO, but I could definitely say yes to that on the Federal Reserve. We're essentially long 9 different metals, precious to base. We're long everything from...
Keith McCullough joins us once more. He's the CEO and founder of Hedgeye. We're going to talk about exactly how to manage your portfolio in today's very tumultuous environment. We don't even know which countries will be around by next week. So we'll find out how to manage our investments in this world. This video is brought to you by Kalshi. It's a fully regulated platform that lets you trade on real world events, from economic data to political outcomes. Sign up and use my code LIN, L-I-N. Link in the description, or scan the QR code here. And new users will get $10 on their first $100 deposit. Traders can put money down on their favorite teams, events, elections, and more in all 50 states, including California and Texas, and over 140 countries. More on that later. Keith, Happy New Year. What a world we live in. What a start to the year. Welcome back.
Happy New Year to all my favorite Canadians, David. Thank you for having me on. I appreciate it.
Happy, favorite Canadians, favorite Americans, favorite people around the world. Let's talk about the world first. What kind of a world are we living in right now, Keith? Why are we talking about the U.S. annexing Greenland, possibly annexing Canada, which we'll talk about soon? Your firm, there's 2 branches to your firm. There's risk management, there's asset management, both of which we'll talk about. We'll talk about some of your new ETF offerings as well. Very exciting. Congratulations on that. But just on the risk front, how do we risk manage this current environment? What is happening?
I think the number one thing you should do in risk managing, like the media, is just to completely ignore it, turn it off, focus on numbers, not narratives, because that's the big opportunity. You'll, on the one hand, see mainstream media talking about selling America. You'll see on the other hand, if you're in Canada, about potentially selling Canada maybe. But I mean, the fact of the matter is that markets have continued much, much higher, much faster than most people have thought. I don't think people are bullish enough. We talk about what we call a quad 1 Goldilocks environment. Quad 1 being when inflation's slowing and real economic growth is accelerating. So we have the 4 quads, as you know, in our framework, and Goldilocks is the most exciting one because that's where all the fun stuff works, everything from base and precious metals to small cap stocks. So there's a lot going on. I haven't had this many long ideas in a long time. It's not new as of obviously today. But I think the days to take advantage of that, or to have your buying opportunities, are in days when people are having their, what I call uniquely American, panic attacks or political attacks or geopolitical concerns. And so not to say that those things don't matter. I mean, we're the only firm that's called every stock market crash since 2008. So I think I'm pretty adept at, seeing some risks when they develop, and we have some shorts on too. It's just that I think there are many more longs and buying opportunities.
Well, the fact that the S&P is almost at 7,000 points, I guess, speaks also to your point about how the markets don't really care about what's going on. But ultimately, are you prepared as an investor to be long war? In other words, do you see more geopolitical hotspots actually translating into kinetic wars like what we saw in Venezuela, but just on a larger scale? And are you positioned for that?
Yeah, I mean, we're essentially long. When you're long 9 different metals, precious to base, we're long everything from lithium to copper. I mean, some would argue, and I don't need a narrative to support it, but some would argue that a lot of these wars have to do with, with resources, or the safety of resources, or the nationalization of resources. We have that. Like, I have 30 positions in my long only account that I show every day. 9 of those are metals. Yes, they include the precious metals, which also do fine when you see geopolitical risk rising. Obviously, silver at $85 today is not saying no to that. So I'm long gold, I'm long silver, I'm long platinum, I'm long palladium, I'm long copper, I'm long lithium. I mean, the list goes on and on. But on the same token, I think people really underappreciate that during the wars that we actually had, in particular the European war, that global industrial production growth went into a recession. So a lot of these things, whether it be China coming out of a recession, or Europe coming out of very low growth, or the U.S. industrial base coming out of its recession, I mean, those have been huge buying opportunities. So again, I don't think that I would never use war as a one factor model to start with anyway.
Well, I want to get your take on this. We're both Canadian. This is from Cowshare Prediction Market. This is a trade. What will be the 51st state in Trump's term? Greenland, 9% now. Puerto Rico, 6%. Canada, surprisingly low. I don't know why surprisingly, but only 3%. It's not zero. It's a non-zero probability.
I just had a very good conversation with who I'm sure you know, and you've probably had her on your show. If you haven't, you should. Dr. Pippa Malmgren, who's phenomenal. Yeah. And she just gave she gave on Hedgeye TV. We have a thing called Real Conversations, which I should have you on, man. We could turn the tables. But she just gave again, Greenland is a national security play. It's a resource play. There are real reasons, away from people just saying that Trump is clowning people, to actually engage in that thought. So on the other hand, you have Canadians are like, WTF, man, like, are these guys completely out to lunch? Like you see, there are levels of pissed off that Canadians can have when they're told they're going to be the 51st state. And I certainly would have some of those levels. I think we'll just leave it to who wins between Canada and the USA in the Olympic hockey match that's coming up.
What? Look, okay, so the levels of pissed off aside, does it make sense geopolitically for America to pursue Canada as a territory? Does that, when you think about why they want Greenland, when you think about why they want South America to be a sphere of influence, when you think about the Monroe Doctrine, which is now called the Dunroe Doctrine by the media, and you think about why Donald Trump wants the entire Western Hemisphere to be under the U.S. sphere of influence, does it you tap into his mind, does he think about Canada actually seriously, you think?
The Prime Minister said this weekend to a group of Canadian businessmen, he was a private meeting, he said that your wish for Canada to be the 51st state is a, quote, real thing. Is it a real thing?
Yeah, it is. I think Canada would be much better off being a 51st state because we lose $200 billion a year with Canada, and I'm not going to let that happen. It's too much. Why are we paying $200 billion a year essentially in subsidy to Canada? Now, if they're a 51st state, I don't mind doing it.
Yeah, I mean, because he doesn't read books or anything. I mean, he looks at pictures, and when you look on a map, I mean, it looks like if you're playing Monopoly, Canada, from a natural resource perspective, looks like Park Avenue and Broadway. I mean, there's no question that one can dream that up in their mind. But the idea that Canada is going to be the 51st state, I think, is just an idea. It triggers certain people who actually don't even know where the map is, think it's a pretty funny and cool idea. I'm not going to pick on people in different parts of America, but obviously, a lot of people don't require to have much wisdom to agree with what. Anything I call him pump, but anything that Trump has to say.
I've seen reports that they're mobilizing troops. The U.S. is mobilizing troops along the border of Mexico currently as we speak. So we'll see what happens next with South America. My question is, Keith, do you think NATO is at risk of disbanding?
I have no idea. I mean, maybe that's a good idea. I mean, a lot of the establishment, if I just take, because that question, I directly have no edge on that, nor would I ever purport to. But I do think that just challenging the establishment, globally, challenging the elites and the structures that they've created post World War II, that is absolutely a fourth turning thing. We have an ETF for that now called the Fourth Turning ETF, which many of you would probably recognize as Neil Howe's book. He's written 2 books along those lines. One's called The Fourth Turning is Here. These things are demographic things. They're time and space things. They're a lack of societal trust things. There's so many different components to what's going on in the world right now that I think you have to really say, hey, could the world be better without the Federal Reserve in its current structure? Could be better without NATO. I don't know about NATO, but I could definitely say yes to that on the Federal Reserve.
Yeah, let's talk about the Federal Reserve. There's another war going on that's between the Fed and President Trump. So you tweeted this the other day. Meanwhile, old walls, MSM can't even print all the words all-time highs as news. I see what you mean.
They even put the red glasses on Powell. Like, it's red, it's bad, it's what Mike Bloomberg needs and wants it to be. Like, it's not, Mike. we're paying you a lot of money for these Bloomberg terminals. I have many, many of them, so they're super expensive. But, clickbait society isn't that difficult to comprehend. I mean, everyone's trying to get paid. And if you're looking for that as the news, you look as the green arrow that I drew to, which is the all-time high in the S&P. The S&P has been up 6 out of 7 days. A lot of people thought that it could or should be down based on these types of headlines, and it wasn't. So get over it. Get on to the next play. It's not in your account. Betting that way is not making you money.
So there's no market relevance. And I think you've seen the video of Jerome Powell issuing a statement. We can play it once very quickly for the audience here.
Good evening. On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people. Thank you.
He was issuing a statement basically saying, look, Trump, well, it's not Trump, but the DOJ has issued a grand jury subpoena because I haven't lowered the rates per what Trump has wanted me to do.
Yeah, well, of course he's going to say that. I mean, I think in this case, Powell was playing, checkers, and Bessent was really playing chess, and Pump was just like delivering the message. He's like Scott Bessent, who gets our inflation nowcast, knows that the inflation number was going to continue to decline, which it did this morning. They did it the day before that report. Now he's going to be at the Economics Club of New York, Trump is, and he's going to talk about how inflation continues to fall and how Powell doesn't get it. So he's blaming me because he doesn't get it on inflation falling. This is like one of our top 3 themes embedded in Quad 1 Goldilocks. Like, we have the street low, David, on CPI. We have, Wall Street's way too high, and therefore the Fed is way too high on their inflation forecast for 2026. And in the first half of the year, we have inflation dropping towards 2.25%. The street's still at like 3, for the second quarter. That's way too high. And again, I think, Powell playing checkers doesn't understand what Trump's really trying to do is he's going to clown him. He's going to put a white construction hat on his head, and he's going to say, McFly, you just spent $2.5 billion on a building for a bureaucracy that nobody trusts. I mean, that's what he's really doing. And Powell doesn't get it. Powell calls his academic buddies. By the way, the Canadian guy was not surprisingly quick to sign up. He's like, but my central banking friends in Canada and, the governor of the bank of this and of that have my back. It's like, no shit, Sherlock. I mean, they all have your back. You guys are all paid by the same elitist. I could use different words, but they're completely tone deaf, I think. And Trump is taking advantage of it ahead of the midterms. I guess the final point on this would be he's got a lot of different things he's saying to the people. 50% of you aren't going to have to pay taxes. I'm going to change what the codes are on private equity being able to buy housing. I'm going to reduce your credit card. I don't even like Trump. I'm just saying that as a capitalist, or as a human being, you're starting to like these practical things that they're putting on the table. Meanwhile, Powell thinks it's about him.
Well, can you just evaluate the U.S. economy? Maybe Trump has managed to boom the economy. I mean, was a 4% real GDP growth last quarter? Pretty impressive on the surface.
Yeah, I mean, we have a GDP nowcast that's very accurate. We have it running back. We call it running the economy hot on purpose, obviously. So, and that's part of the Scott Bessent plan, like go after Venezuela, lower gas prices. That's part of his, three arrows is to get, gas prices down. And, the only thing he hasn't been able to do is reduce the deficit, obviously. So one way to do that is to grow out of it. And we definitely have we're higher than Wall Street on real GDP growth. We're at 3% for year over year for the upcoming quarter. That's another acceleration. You're talking about the headline quarter over quarter sequential, which is 4. But most importantly, you have inflation falling and an incoming Federal Reserve head who's going to cut rates much more than the street thinks, or he wouldn't get the job.
So let's take a look at one of your macro week summaries from, I think, last week. So this one here, let's just start with your dashboard. Monthly quad 1 growth up, inflation down. Quarterly quad 1 growth 1, inflation down. And then you got quad 2 for global. Yep. So walk us through what this means and the implications for the dollar specifically, which is what's highlighted in this report.
Yeah, my team did a really good job just like creating visuals for all of the numbers that we crunch every single day. We modeled 50 different countries around the world. You mentioned Mexico. We're along that too. Yeah. You're concerned about Mexico. Meanwhile, Hedgeye is long Mexico. Yeah. EWW, we're long Turkey. We're long Israel has actually been a phenomenal stock market as well. So each country is like a company. They have one of 4 economic scenarios they're in. The world's going into quad 2 mainly because of the heavyweights that are Europe and China going into quad 2. So you have USA and Goldilocks quad 1, inflation slowing, economic growth reaccelerating ahead of the midterms, lots of goodies coming, or at least perceived to be goodies, which are one and the same thing from a sentiment perspective. And like I said, you have China coming out a terrible, like we were short China last year. We're not short it anymore. India's coming out of a growth slowdown too. There are plenty of places in the world that are large with lots of people that couldn't care less about Jerome Powell and his white construction hat.
Okay, the dollar. Let's just talk about the U.S. dollar with current expansionary, I guess, ambitions from the president's office. What does that mean for the dollar? Are we going to get? Can you see dollar flows or outflows like what we saw on Liberation Day, April 2025?
I mean, you're seeing the real money flows in M2 growth, like money supply growth is going up. But that's a worldwide thing. So when you look at the dollar, it's a very interesting scenario where it too, for now, is signaling. And again, I reserve the inalienable right to change my mind when my signals do. But the dollar is signaling nothingness. And what that's signaling really is that the rest of the world's doing the same thing. I mean, if there is one big signal, it's that the yen continues to deteriorate against the dollar. So that provides dollar strength. Because when you talk about the dollar, you're either talking about the dollar against the euro and against the yen in particular, maybe the pound. And if we go to Vancouver and hang out at your place, and we'll include the Canadian dollar and others. But you have to get the other currencies right as well. I mean, in Japan in particular, they have Takaichi who's in. She just called the snap election. We're short the yen against the dollar. She has every intention of behaving Japanese. Have the macro tourists out there who all thought the Japanese government bond yields breaking out to the upside thought a little bit about why the yen is going down in a ball of flames? It's because the next move for Japanese government bond yields is for them to go down and for them to print money like they always do.
Well, you have, let's take a look at the, going back to the U.S. economy. We have here 50,000 jobs added in December, changed little, and it's not a big number. How do you reconcile a slowing, or I guess a weak labor market, not really collapsing, but just kind of chugging along sideways, versus your pro-growth quad 1 outlook?
Yeah, we just call that Goldilocks. Like you said, it's not really slowing. It's definitely not accelerating. It's just about right for the Fed to stay dovish. And again, that's all I need. I mean, it's a perverse thing to say for a guy from Thunder Bay, Ontario, that that the people could be in like a kind of meandering place from a jobs market perspective. Young people, it's terrible actually to try to get a job if you're a young person right now is becoming increasingly difficult. I don't want to go down the rabbit hole on AI's impact on that, but really what I care about is really it doing nothing. Nothing is Goldilocks. That means the Fed stays dovish as real consumption growth continues to accelerate anyway. You don't have to have, a raging acceleration in the jobs market to have consumption growth go up.
All right. Well, let's move on to some sectors and assets here, starting with precious metals. This is what you tweeted. If you like gold, you'll love the other 4 ETF metals asset allocations were long that are beating it in the last month. Silver ripping to an all-time high. Silver is just killing it right now. What is the silver price? I move every day. I'm 85. Yeah, it's crazy. 86 now. You see, it's moving every single hour.
New all-time high.
And it's like the people calling for triple digit silver, because I've been in this business for a couple years now. I remember back in 2020, people have been telling me triple digit silver. They were labeled as, a little bit eccentric, let's put it that way. But that's $14 off. It's like, it could happen next week. I'm not saying it will, but at this point, it's like, okay, well, that's not even that big of a move anymore. So tell us about your metals asset allocation strategy overall, and how the precious metals, gold and silver, currently fit into your asset allocation, because they are quite expensive relative to where they were just a year before.
Yeah, and I think everyone's position starts with where they put it on, right? So I bought the living daylights out of gold in February of last year when it was a lot lower. I bought silver in May. I then added platinum and palladium. My price target for all these things is higher, right? That's it. Like, I think you have to be a certified idiot to put a number on there, to your point, that could get eclipsed like on any given week from now. That doesn't make any sense. If you're going to have, which we did have as an initial price target for silver when we bought it in May, all-time highs. That was the price target. It's going to go through where it was in the 1980s. That's why we actually like platinum and palladium. You have to go back on platinum in particular to 2008, I believe, where it got up to 2290. So you can look at platinum today, it's nowhere near 2290. Or if you look at palladium, for example, it peaked in 2020 at around $3,400. So those two are the real. That's why we've added lithium. Like, it's called a mean reversion trade in macro, where the gold and silver signals now are so, to your point, powerful that it creates a bid for everything that's linked to them, however people think about them. So, we're going to stay with that in quad one. That's where precious metals have their best runs anyway. So it was the right setup to be. And I like to think that, my positioning, I'm not like Nostradamus or whatever people want to purport to be out there on Wall Street with their price targets. I've never worked, for the old wall, and I'm not going to start with price targets now. I think higher for now until we say that we're getting out is how we're going to deal with it. And there's no other way for me to deal with it.
Lithium is on your matrix here, and it's having a bit of a comeback since it basically collapsed a few years ago. What's the narrative now with lithium? There was the EV narrative, and then there was oversupply from China. What is it now?
My main narrative is that it's up 60% in the last month. I mean, that's like, again, you can come up with a narrative, as you know, for pretty much anything in life. The thing about narratives, it's the most dangerous thing in the investor mind, because, of course, it's totally human. We as humans want certainty. What I embrace is uncertainty. If something goes from, and I used to be short lithium. So again, I don't have a narrative on why it was, why I had to be short lithium, other than it broke my intermediate term trend signal. And we were actually at that point entering what we call quad 4. And that's really the time where you don't want to be long these, call them higher beta metals, is in that type, or growth metals that have all these narratives attached to them. The long-term narrative is going to be there. The shorter to intermediate term risk management scenario needs to be risk managed. So, lithium, there's always been a good backstop demand case for it, but you have to be in a global quad 2 environment. So again, global quad one, quad two, you showed the Hedgeye dials in terms of where we're at. That there's no better setup for global demand for anything. That's also why, again, why we're long copper. There's no differentiation, at least in my own mind. I don't wake up in the morning saying, oh my God, I'm going to talk to Lynn today. I got to come up with a better way to pitch copper than lithium. I'm long both and happily long both.
The fact that lithium has gone up 60% in the last month, the fact that silver's up, 160% in the last year, gold's up 70-something% in the last year. At what point do you start taking profits? Here's your newsletter. You wrote, your team wrote, precious metals continue to confirm quad one with gold pressing near the TRR. What does TRR stand for in this context, by the way? 4,500.
Yeah, TRR is the answer to the question. So the TRR stands for the top end of the risk range. Right. So, we have a trademarked risk range signal that we publish every day. So the way that, I invest is I take a core position and then I trade around the risk range. So let's say I had a 2% position in something like lithium and it went up to the TRR. I went to the top end of my risk range. Then I'd sell like 50 or 100 basis points. So then, if I went from a 2% position to a 4% position, then I'm down to 3.5 to 3. Every time it gets to the top end of the range, I'll sell some. And then when it corrects, I buy some more. But I always keep that main core position that I bought. The when on these things, when you enter these positions, there's no more important thing. Anybody who tells you that market timing doesn't work, it's because they can't do market timing. That's what we specialize in, which is fully loaded with the short-term risk range. Top end of the range, low end of the range is top end of the range TRR versus lower end of the risk range. LRR is, of course, where you buy it more aggressively.
Mm-hmm. What do you think of some institutional managers' strategies of maintaining a certain weight within the portfolio? Let's say they have a 5% weighting to gold. Gold goes up, 70% this year. It's going to blow past their 5% weighting. So they sell enough just to maintain their 5%. Do you do that?
Yeah. And mine's 12. I mean, so for gold, because gold is a currency, not a metal, I can take a much bigger position. My max position in a commodity like lithium is 4%. Bitcoin, we're long that finally. After being shorted, the max for a commodity, which Bitcoin we call commodities, 4%, but max for gold, which is a currency, is 12. So, so that's, we define, I think that's we could get in a whole other discussion about this. I think it's something that most human beings that dabble in markets are actually doing just that. They're dabbling. They don't have a plan on what their minimum and maximum position sizes are. They don't have a plan on how they touch it at the top end of the range, the bottom end of the range. We provide an entire, solution for that. That's what the process is essentially.
Overall, then, how often do you, not just for gold, but for any asset in your portfolio, how often do you change the weighting of that particular asset in your portfolio? A year, let's say.
Well, we never change what the minimum and the max are. We only change the weighting when, again, we'll reduce when we're at the top end of the range and we'll buy more when we're at the low end of the range. So you're always moving within, like for Bitcoin, for example, I'd never be bigger than 4%. I'm long Bitcoin, Ethereum, Avalanche. So if I go max in all three of those, I'd have a 12% position, which would be 4 times 3, right? So the beauty of this market, David, is that you can rotate your hard-earned capital every single day into something that's actually going down. There were major buying opportunities in the precious metals only 2 weeks ago. So, you can sell something that's working, reallocate. So that's how I do it. I understand other people do it different ways, but I have enough problems and my hair goes gray enough trying to execute on my own process.
Sectors now, U.S. sectors, you've made some changes here. Sector style rotation continues to confirm quad one. Active rebalancing as signals evolve. We removed our consumer discretionary long, added a short in consumer staples this week. Yep. And you have standing positions in industrials and utility. So you're short staples and you removed discretionary. And we're
short utilities. Yeah.
That may seem contradictory on the surface. Can you explain that? You're short a defensive sector, but you also removed a cyclical sector.
Yeah, I just exchanged it for actually airline stocks, which are jets. So the ETF is jets, and today I was actually buying regional banks, KRE, because the banks are weak with JP Morgan. But just replacing the main problem I had with XLY is that it has Tesla in it, and Tesla is no longer signaling, what I call signal strength. So it's such a heavy weight inside of the ETFs. This is essentially why I started my own ETF business. I don't like the construction of the ETFs that I have to buy. So let's just launch our own, right? I mean, but the main point is we're short staples, as small cap staples, PSCC, and we're short utilities. Utilities is the only sector in the S&P, I think, that's down this year. We're only 8 days, 8 trading days into the year. But again, it's been an alpha position for us. XLU utilities has been. Whether you're long consumer cyclicals or classic cyclicals like in industrials, we'd be long both.
The Pink Panther, the quiet setup behind healthcare's breakout. What is the relationship to the metaphor here behind this? Why is it called the Pink Panther here? Tell us about healthcare.
Well, because it's not healthcare the way Wall Street designs their healthcare ETFs, so we call it the Pink Panther. Most people, if you look at the Pink Panther, you prefer the Pink Panther than the XLV. We're actually long the XLV as well. Healthcare is an interesting one because healthcare last year we started the year short it. We actually started the year making a big call that the stock market would crash in the first part of the year. It did. Then we started to rotate into sectors. Initially, we didn't buy cyclicals. We actually bought the Pink Panther and we bought healthcare broadly. And that was an excellent move because most people had at that point, healthcare was just a dog and they got rid of it. Now we're long it. Michael Taylor, who runs the Pink Panther, the Pink ETF, has been awesome. There are stocks in there that aren't even healthcare stocks. They're actually cyclical stocks. So you get a bit of a kicker there. And, I like Mike T. I think he likes when we make nice posts like that with the Pink Panther on.
Well, do you think that, okay, just going back to banks for a minute, by the way, you read the story last Friday. Trump announced that he wants to cap credit card interest rates to 10%. Hasn't been enacted yet, but he wants to do that this year. But yet, and banks fell a lot, most banks fell a lot on the news, but yet you're buying banks on the dip. You don't think that's going to happen where it affect their profitability?
Yeah, on to be clear, I'm buying regional banks, right?
Regional banks, okay.
KREs, regional banks, I would never underestimate, the consistency that Trump will say the same thing over and over again. I mean, whether or not it's valid, it's intellectually correct. Like, I don't care. I'm not an intellect. I think most people can tell. And again, it doesn't have to be right in my mind because I don't have a political mind. I always say I'm I'm not a Democrat. I'm not a Republican. I'm a Canadian, and I'm going to buy whatever is signaling buy. And those regional banks keep me away from being long we're not long like a credit card ETF or anything like that.
Okay. Well, what do you think about the bigger banks though? Capital One dropped 6%. JP Morgan down 4%. Citigroup down 4%. JP Morgan, Bank of America fell 2%. Not huge moves, but credit card businesses aren't the only line of businesses, So we have this ongoing thing happening. Do you see financials recovering from this, or are there other headwinds that may push the chairs down even more? What do you think?
Yeah, JP Morgan's an interesting one, right? Because they now even have the Apple business, I believe, the Apple Card business that Goldman screwed up or whatever. But I mean, I'd stay away from that. I mean, when momentum turns in this market, you better accept it as the new reality and move on to the next play. I mean, Visa broke, MasterCard broke, JP Morgan for now looks like it's hanging in on my trend signal, but it broke what we call medium term trade support. So that wouldn't be something incrementally we're buying. What you want to do, and it drives the value oriented people nuts. You want to own momentum that's working. That means your account go up. Right. It took me a long time to figure that out, like 25 years, because again, in our minds, we want to be right. We want to be buying the thing that's down. No. I want to buy the thing that's correcting, that is signaling higher highs, preferably higher all-time highs. And now all those credit card stocks that you mentioned, they're not signaling that. So I would just stay away.
Any other sectors or assets that you're really bullish on this year that we haven't discussed yet?
Yeah, I like themes like space, quantum. We're less bullish on quantum than we are on space. Like the ETF we've had a lot of success with is called UFO. So again, another topic that we've been on top of. I think that a big theme will be the Bag 7. against like things like that. There are huge themes here to be capitalizing on: defense spending, obviously precious metals, resource scarcity, robotics, space. So when you look at, some of the bearish trend signals that we have, I call them the bag seven because half of them are bag holding stocks right now. Like, they're not making any money. Meta and Microsoft, which we have as bearish trend signals, those have been bloody awful stocks. Netflix has been worse. So like, there are a whole bunch of stocks that a lot of the people own because they worked for so long. I get into the organic growers and a blended portfolio of cyclical growers. Like, we're along everything from like JB Hunt to Cat Tractor to HII, Huntington Ingalls, which is a defense contractor. So, I think that, in our ETFs, you can see this, where we have much different blends than the people who want to be famous on CNBC in our ETFs.
Yeah. Well, tell us about this new ETF that you just launched.
Which one?
Yeah, I think there was a few.
We launched. We launched Neil Howe's fourth turning ETF. The ticker on that,
the one that you wanted. Yeah.
Heft,
yeah.
Fourth turning, like, this is right. So if you think the world's going to end, there is a component in there for that. For example, it's long precious metals. It's got plenty of defense stocks in particular. If you look inside, obviously ETFs, you can look at the holdings at the close every day. So I think one of the more interesting ones is Hedgeye long short, it's called HELS, HELS, because I don't see any competition for us on the short side. Certainly looking back to 2008. So stock picking on the short side matters. There aren't many ETFs that do that. If there are a couple bear ETFs, I'm actually short them. HDGE and Dorsey Wright's ETFs, DWSH, we're short both of those. So we have those two. We have David Salem's Hedgeye asset allocation ETF. The ticker on that's HECA. He's been phenomenal. Again, the performance on these things I can't talk about. They should speak for themselves. And then there's Sam Rahman, who's competing with like a Kathy Wood competitor. For us, it's called HGrow, so quality growers. What you'll find in that one is not just the go-go stuff. You're going to see cyclical stocks in there, for example, and stocks that maybe not everybody talks about on old wall TV every day. Okay,
great. Well, congrats again on all these launches, and you've been definitely correct on a lot of your calls, including precious metals. So great start to 2026, a volatile year so far, but not so much for the markets. So overall, then let's close off the conversation. Overall, given your quad one pro growth outlook, you don't see the S&P deviating too much from 7,000 points, at least to the downside. Is that fair to assume?
That's fair to assume. And if you want that risk managed, we have an ETF for that as well. It's called KSPI. It's a hedged S&P 500 product that competes with JP Morgan's, well-known JP hedged product. And you can look at the performance differentials there. But I prefer our best idea, I should have said it, maybe it's a good one to close with, is our biggest incremental U.S. equity allocation in December to get set up for this year was the Russell 2000. So we like the Russell 2000. We also like microcaps. IWC is the ticker for that. We much prefer that than the S&P.
I'm just curious before we close off, because we're both Canadian, what's your view on the TSX composite? Most of that is oil companies and resource stocks, as you know, had a tremendous year in 2025, I think up something like 35%. But a lot of it does depend on oil. And with, Trump expanding his oil reserves to now Venezuela, which is the country with the biggest oil reserves in the world, that some analysts said could put some downside. Let's get your take.
I would say that the TSX looks like how Canada is going to look against Team USA in Olympic hockey. The TS, let's just call Team USA QQQ. Okay. I'm long that, but I think the TSX, first of all, it has beaten Qs badly in the last month to 2 months. The price momentum largely reflects that Canada owns a lot of the things, back to your prior point, that maybe Pump, if he's playing a little Monopoly, he'd like to own. So, everybody knows that you'd like to be long of Nathan McKinnon, McDavid, and McCarr over who Team USA has. Like, everybody knows that, but they'd have to live in Canada to understand that.
All right. Okay. So you're bullish in Canada as well. Thanks very much, Keith. Where can we follow you and your hockey predictions? Where can we stay up to date there?
Those are. I'm a Leafs fan, so that's the problem there. I'm terrible.
Okay.
Please don't follow me. But you can, at Keith McCullough on Twitter. I'm up early every morning and providing some of this stuff. We try to educate a little bit for free, but now we have the ETFs. You can check that out too on hedgeyeam.com or hedgeyeassetmanagement.com.
Yeah, Keith's got a big following on X, 280,000 followers now. Congratulations. And so follow Keith there, follow Hedgeye, links down below. Happy New Year once again. We'll catch up again soon. Take care for now, Keith.
Thanks, Dave. Appreciate it.
Thanks for watching. Don't forget to like and subscribe and follow Keith and Hedgeye, links down below. And don't forget to use my code LIN, L-I-N, when you sign up to Kalshi. Remember, first-time users can get $10 on their first $100 deposit when you use my code LIN, LIN, link down below or scan the QR code here.